On the show today, Total enters $8.8 billion deal with Occidental and for Anadoko's Africa assets. And Kenya to cut budget deficit to 3% by 2022. Plus, forex shortage in Zimbabwe stalls digitization initiative. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwago. Well, we'll begin the show with the markets in Africa, where most markets there were negative at intraday. The JSE index in South Africa was down 0.19%, while Nigeria's NSE index was down 0.09%. Meanwhile, the EGX 30 in Egypt was up 1.55% at intraday. Kenya closed in the red on Monday. In the meantime, it's a red Tuesday in the Gulf region as major markets there were all in the red at intraday. The Qatar index shared 0.44%, while Saudi Arabia shared 0.40%. Markets in the UAE were both down 0.42% and 0.28% each at intraday. And in Europe, stocks traded slightly lower during morning trade after it was confirmed Chinese Vice Premier Liu said he would attend trade talks in Washington. Well, let's bring in Conrad Busen now to give us all the details out there from the European space. Hello, Conrad. Good afternoon.
Good afternoon, Jimmy. Thanks for having me back.
Right, you're welcome. Well, China's government says Vice Premier Liu will go ahead with a visit to the United States this week in order to work on a tariff and trade agreement. Shouldn't that be a big relief for the financial markets today?
Yes, it should be a relief, but it's not a big relief for the markets, at least not in Europe today. Look at the German share index DAX. It's trading lower. This looks a bit dramatic. It's not very dramatic. It's a decline of around about 0.6% right now. Of course, we also have to keep in mind that last week the German share index had reached the highest point so far this year. So the overall level is not really strongly negative, but sentiment, of course, has been negatively affected by those tweets by Donald Trump. And, you know, after those tweets, a couple of the members of his negotiation team have come out with statements that made it pretty clear that those negotiations are not finished and they are not always going smoothly. So even if those tweets by the US president might have been some sort of negotiation tactics, at least the members of his negotiation team are not contradicting those tactics. What's more, here in Europe, a few of the, ghosts from the past have resurfaced in Turkey. You know, the decision to undo the city council vote and the mayoral vote in the city of Istanbul has reminded everyone of the uncertain political situation. This is seen as another sign of President Erdogan's influence on institutions that are supposed to be independent. All that has put some pressure on the markets in Turkey, the equity market there, also the Turkish currency. Fitch, the ratings agency, has reissued its negative outlook for this currency. It expects the economy in Turkey to decline by 1% this year. Inflation in Turkey is nearly at 20%. Not many reasons to be really optimistic, I would say.
All right, let's come down to Germany, where you are looking at some of the data that came in today, and that's factory orders which managed to rebound according to the numbers we saw today. How much optimism is justified there? How sustainable is this?
It's not reason enough to be really optimistic, and it's not reason enough for economists to call it sustainable yet. There has been a rebound in March, but if we look at the overall third quarter, there still is a decline in factory orders compared to last year of 4%. And economists also are saying that if we did not take into consideration factory orders for large goods, in particular airplanes, then the factory orders number for March also would have been negative. So not enough to really talk about optimism. Adding to this, most of the earnings reports, or a number of earnings reports at least coming out today, show that, you know, there's not enough going on for investors to really become optimistic again. Earlycon, the Swiss large industrial group, reported a first quarter report which contained a 10% decline in new orders, which has a lot to do with fewer demand from China. Also, the German glue and detergent maker Henkel missed analyst growth expectations for the first quarter. It struggles with falling sales here in Western Europe and also in Asia. You know, and all this combined means that investors do not really see reason to go into equities right now.
Well, still in Germany, Lufthansa is preparing an offer to take over Thomas Cook's condo and all of the other remaining airlines of the British holiday operator. Is this a good idea?
Yes, it is, Timmy, and thanks for pulling out this one positive story of this Tuesday. Lufthansa's shares are slightly lower also, but this doesn't mean that analysts would not be convinced that this is a very good idea to make a bid for Thomas Cook's Airlines. Strategically, this move really makes sense for Lufthansa. And what I also can tell you is that investors in Thomas Cook are really happy about the idea. Thomas Cook's shares are up 11% this Tuesday. The holiday destination business of Thomas Cook would be a perfect fit for Lufthansa's scheduled airline business, especially the long-haul destinations, maybe the medium-haul destinations. The antitrust authorities might have to say against such a deal. But even if Lufthansa made a few concessions there, the rest, you know, what will be allowed to Lufthansa to take over will really fit into Lufthansa Group well, make its business larger, allow more economies of scale. So an overwhelming majority of analysts is convinced this is a good idea.
All right, Conrad, let's continue to follow those developments out there in the European space and talk to you tomorrow. Enjoy the rest of the day.